BlackRock, we know, recently made some headlines. They first off partnered up with Coinbase to offer crypto to institutional investors, right? So that was recent news a couple weeks ago. Then they decided to launch their own private trust to give their clients exposure to spot Bitcoin. So, Larry Fink's been talking about Bitcoin for years, going all the way back to 2017, 2018, when he said, well, BlackRock's going to look into Bitcoin futures. We're going to start investing in companies, right? But nothing definitive, nothing that actually showed that they actually were in the space, right? But recently, obviously, with the big announcements, a lot of excitement over BlackRock getting involved with crypto and Bitcoin because they could bring in trillions of dollars into the space, right? But this morning, I actually saw this. This headline actually had nothing to do with BlackRock and FTX, right? And this is actually talking about the world's biggest companies and how much money they put into the blockchain sector or crypto sector. And then I couldn't help but notice that BlackRock is listed at number 2 right behind Google, which is Alphabet. And look at who they are invested in, all right? It's clear. FTX, Anchor Digital, and Circle. Circle actually is the company behind USDC. Interesting. So not only is BlackRock involved with one of the biggest stablecoins out there, but also one of the big exchanges out there that happens to be trying to buy out everyone. So it seems like BlackRock has been in all along. So I was looking at it back in 2021. BlackRock led a big funding round within FTX that actually valued it at $25 billion. So FTX definitely, there's some kind of connection there, right? And recently, we know because of all the troubled crypto companies, that came out because of Three Arrows Capital and Terra's collapse, Sam Bankman-Fried of FTX been buying. And I even made the correlation that, FTX is starting to turn into like the BlackRock of crypto, right? Well, now we know where he gets his inspiration from. Or maybe Larry Fink is in his year, because it turns out that Sam Bankman-Fried now is the largest shareholder of Voyager, owning 11%. Not only that, they own about 7.8% of Robinhood. Also, I didn't know this, Bitwise Crypto Index Fund, which is an index of top 10 cryptocurrencies. Guess who owns 8.4% of that? Sam Bankman-Fried. He is buying right now. Very much like BlackRock, who owns $10 trillion worth of assets, right? So there you go. There's definitely a connection there. Whether it is a good connection or not, I don't know at this point. It's too early to tell. But it does seem very odd that FTX, or at least Sam Bankman-Fried, is trying to buy so many companies at one time. And this doesn't even cover the fact that FTX has bought out a couple exchanges like Liquid from Japan, and trying to buy BitHub from South Korea, and trying to acquire even other companies I can't even think of off the top of my head. So SBF and FTX, the new BlackRock of crypto. And we'll see what this means going forward, whether or not this is actually a good thing or not. I'm assuming it's the latter, but you know what? Maybe he has a plan that I can't foresee right now. All right, maybe he's going to try to better off the ecosystem. So I guess we'll just have to wait and see. What is a surprise is it looks like there are a lot of banks trying to get into crypto right now, specifically utilize stablecoins. So it's actually causing the Fed and some of these Fed governors, to really start looking at and taking seriously something that the U.S. Can produce themselves, something that could compete with the stable coins that exist right now, right? Like CBDCs, we've been talking about it, and there's supposed to be something that they're looking to implement called Fed Now, which could be alternative to CBDC. So I don't quite get what Fed Now is, but they're trying to get this ready by mid-2023. And it looks like it's some kind of new digital payment system. Not exactly using crypto, I don't think, but it is something that they're working on because they recognize there's a lot of banks and financial institutions that really want to utilize blockchain and stablecoins. So now the Fed is trying to rush something out called FedNow. I'm going to have to keep my eye on that. I don't know what that really means exactly and how serious they are about it, but that's kind of interesting, right? Kind of interesting there. But knowing the Fed is probably and knowing the politics in the U.S. probably going to be like years upon years of fighting before something like this ever gets implemented. But we'll see. We'll see. All right. What else is there? Cisco reported earnings today. Pretty good. Unlike Target released horrible numbers today, but they're pretty optimistic about the rest of this year. So we're getting a lot of big retailers and tech companies that say, hey, we're doing just fine. And the rest of this year will be fine as well. So these are good things. Good things. All right. What's not a good thing is Kwan, he hires a law firm, right? Because he anticipates he's going to get sued left and right. First of all, I don't know where he's getting the money from because, supposedly he said he lost it all along with everyone else. So I don't know how he could afford to hire a law firm. And second of all, he's still hiding out in Singapore. So is he going to go back to South Korea, right? If he's going to get sued, is he going to stand in front of a jury? I don't know, but it does look like he's preparing to battle. Also, unfortunately, there's a Canadian pension fund. We hear about pensions and pension funds getting into crypto, right? Unfortunately, one of the biggest ones in Canada put $150 million into Celsius, and they have just written that off because they anticipate they're going to get zero back. So they just wrote it off as a loss. Okay? That's never a good thing. So that's how little the CEO thinks of Celsius and the chances of them recovering anything. He just said, forget it. We're just going to assume it's nothing. We're writing this whole thing off. So it's unfortunate. It's a black eye for these institutions, especially for this one, but black eye for all institutions that are thinking about getting into crypto, right? Because they look at this and like, well, we don't want to risk $150 million. So they didn't anticipate, I guess the risks involved, right? So it's not good overall. I mean, it's not good. Obviously, we're not even, thinking about the people that actually put their money into the pension, right? So there's just a lot of bad stuff that's still coming out of this. So black eye for the whole industry, and of course, we still don't know what's going on with Celsius. Supposedly they got the okay to sell off their mined Bitcoins to kind of pay for operations. I read something about that this morning, but it's only like $10 million a month or something like that. And they're burning through way more than that per month. So it's anticipated by October they're going to be out of money. So I don't know what happens afterwards. Again, it's a messy situation. That's for sure. If you're looking to buy Bitcoin and crypto for the first time and you don't know where to get started, head over to CryptosRus.com and click on the best exchange guide. Within, you'll find a list of exchanges that I recommend and some that I use on a daily basis. If you are outside the US, I highly recommend looking at Binance.com first. They are the biggest exchange out there, supported in almost every single country. They have a fantastic fiat on-ramp, off-ramp system. They offer the most trading pairs and the lowest fees in the industry. You could also download a mobile app onto your Android and Apple device very easily. If you are in the US, I recommend taking a look at the sister company of Binance, Binance.us, which offers all of these things and more. So if you want to learn more, head over to CryptosRus.com or utilize the links in the description of this video.